Jack Scoville is joining Jerry Gidel today to talk about the markets overshadowed by tariffs on US and China, counter punching the US. They are ready to discuss right here on Connected Farmer, your channel, to keep you up to date with the latest trends in agriculture and livestock. So I think I will start with our guest today. We will start with Jack. So if my numbers are right, China is retaliating the US with a 50% tariff on soybeans. Do you think that number is right? And is that possible to make any profit with that significant tariff, Jack?
Well, it's probably not real likely that you're going to make much money if you're in China with that significant a tariff and everybody else importing from Brazil.
Mhm.
That's going to be a big problem because Brazil and China are buddies right now. We're not,
Mhm.
and we're imposing these tariffs. China retaliated with a 34% tariff on us in response to our latest tariffs, but the total could be 50%. And that pretty much shuts us out, I think, of the Brazil market. Last year, we exported a lot of soybeans to Brazil, well over 800 million bushels, I think, and we stand to lose a good chunk of those sales in the coming year because of this tariff battle going.
Yes, Jerry, what's your take on this?
Oh, definitely. The interesting scenario on it was that we had 10% on before, then we went to 20, even before we had the announcements of this week. Then we turned around and said we're going to give other consideration. So when we uh, issue, and then they come back retaliation, that's the thing that's the kicker on it. And that interestingly enough, some other places that we've established some pretty high tariffs, they decided to negotiate some more, or at least consider it at this point. India is one of them, South Korea, uh, you know, and
Vietnam.
interestingly enough, we had Israel and Ukraine both got some tariffs too. So it's just pretty bizarre in the middle of both of those situations. But in general, that's definitely puts it in a tough spot for any exports of our stuff to China at this point. But hopefully, there's a negotiations behind all these things. The biggest problem right now is hard to see that situation when the president's out golfing on the day going to the weekend, and he likes to play the nonchalant president, which he can be, I guess, at this point. We'll figure out if there's any more things to just announcing things and actually negotiating things, which is always highly important in the world of economics around the world.
Yeah, and in the markets, the soybeans closed 46 cents lower. And what do you think is going to happen next with the commodity markets, Jack?
Well, actually, I'm taking a little bit of a contrarian view here. I feel like we're flushing a lot of the emotion out of these markets now, and we're hearing the worst, at least with China, what the tariffs are likely to be. So I suspect we maybe Monday will be lower again, but I suspect by sometime next week we'll be trying to rally because we're going to shift away from just worrying about the tariffs, which are going to be a very important demand feature here, no doubt about it. But we're going to start looking back towards the supply side and worrying about weather and things like that. And there's already been talk about how wet it is in the eastern Midwest and things. And so we're going to start, I think our focus is going to shift back to that a little bit more.
And Jerry has his updated U numbers and planting estimates, right, Jerry?
Yes, I do have those, and I've sent those along to you by both of you. It turns out, though, I totally agree with some of what Jack's pointing out here. We have made a significant setback, and we've taken things down. Probably in the beans here, we still have some look at below $9.50, which was the last real significant low we've had in soybean prices and that. And at the same time, there's other buyers around the world that will look at these things, and we've given them enough price discount to cover any 10% tariff type situation. But right now, we need to get back to some cooler heads right now. We've really had a highly emotional week in here and lots of conjecture and things of that nature going forward. But uh, the interesting twist on it is that from my point of view, I kind of feel like that the demand structure in corn is still pretty solid out there. We're way ahead of schedule to make the USDA's projections, and both. I kind of feel like that the ethanol scenario is still strong. So I'm kind of looking for 50 of each of those to take down the carryover stock, another 100 million on corn. I don't. It's hard to make a judgment on the soybean carryover stock for old crop because of this highly emotional scenario and the fact we have South America, having most of their harvest of the big areas of Brazil done, and I think there is some issues in Argentina that might see that number adjusted down in next week's number. But in general, here, I think we're kind of seeing limited change in that. And interesting, even in wheat here for next week, we might actually see a slight rise in the carryover stock of 15, 20 million because of the fact that our wheat sales have really slowed down in here. And there's always a late year sprint to get this stuff out of here, but maybe not as strong this year on wheat as it has in the past. But next week's numbers are still also going to be important and could be factors here in prices during April.
Yeah, so how much of a change you see in next week's number?
Well, as I said in the corn side, I think that's the one. And actually, if you think about it, today we went down to the recent support and bounce back going into the weekend, and I thought that was kind of a telltale sign that maybe things were going to stabilize out a little bit. I had already looked over my trend lines and things like that on corn and shipments and ethanol demand and all that, and as I said, put 50 million higher in exports and 50 million in ethanol to take 100 million off, so a 1.44 billion number. Now that's not a number that's like, wow, we're going to $10 or we're even going to go to 5.5, but at least it could stabilize things out going forward. And that the other twist of it is won't, by the way, see the USDA utilize their recent planning numbers from earlier this week, which were definitely a surprise. Uh, all the way up at 95 million on beans and down to 83 million or so. I guess it's 83.5 million on soybeans. But those numbers actually have some positive things in, particularly in the soybeans and corn longer term, which are something to keep in mind that and with the additional break we've had this week, we probably will still end up having less beans because of this additional, shoot, I have to say 10 to 20% break this week in soybean prices.
So, Jack, are you aligned with those projections, and what do you think is a good hedge right now?
Well, I have no problems with the corn projections. I think, demand has been excellent for corn. Corn price action has actually held rather well this week. In fact, it's held great. It closed higher for the week. Actually, so did wheat. So it was really soybeans that took the bath because of the Chinese tariffs, and the rest of the tariff regime didn't really seem to bother the grain. They did bother the grains, but they didn't take them lower for the wheat. As far as soybeans go, we have the USDA planted area estimates, and Um, USDA might try and incorporate those in. I don't know. Jerry says no. That's fine. And but I have no question. I have no problem with Jerry's demand scenario in the corn. The fact of the matter is, the corn demand has been excellent. The export pace is well ahead of last year, and those numbers probably deserve to be bumped up a little bit.
All right. Jerry, is there anything else would you like to add?
Well, I think hopefully the markets will start to realize that we've got some pretty inexpensive long-term values out here, and maybe we'll also start to see a little bit more reactions to the current prices and what's going on, and maybe some more positive things about negotiation, which will help stabilize some values going into the USDA's reports that'll be out on Thursday, I think it is, the 10th. From there, and at this point, we need to stabilize and try to give ourselves a little bit of a scenario, which I think is probably the case here. On things. The soybean side of things, basically, it was vulnerable because of some of his technicals and that. But I also think that the the investor community maybe has overreacted a little bit here, and to some extent. If you think about it, there wasn't a huge amount of potential even before this report, before the announcements, or from seasonality, that this is the time of year when the Chinese buy stuff from South America. So uh, we weren't going to get a lot of business this time of year and that, but maybe as time goes on, we'll get these Chinese buyers back in here longer term.
Hopefully. So thank
Yes.
you, Jack, again for coming,
Mhm.
and we'll see what happens next week.
Okay, great. Thank you.
Thank you, Jerry.
Well, thank you, Jack, and thank you uh, for having another good week of conversation for us.